welcome back to this week's market update. Today is Monday, March 30th, 2026, and we'll jump right in. Looking at last week's market performance, stocks continued to decline as the conflict with Iran continued on for the fourth week. As of Friday's close, we had the Dow Jones Industrial Average down 0.9%, holding up the best among the major indexes. The S&P 500 was down at 2.12%, and the Nasdaq Composite was down at 3.23% last week. Panning out to March's monthly performance as of Friday's close here, you can see all of the major asset classes among stocks, bonds, and real estate, both domestic and international, have been in the red this month, with US bonds holding up the best, down about 2.5%, while global stocks were down more than 10% this month so far. Looking at the sectors within the S&P 500, as expected, only one sector has held up in the green and has been rallying, and that is energy, as higher commodity prices are expected to give a short-term boost to energy companies. The mix below that, though, is quite interesting here. You can see healthcare, which is typically a more defensive sector, that's been hit the hardest there, down 10% in the month, while utilities, another defensive sector, has held up the best. Other sectors underperforming in the month so far: industrials, cyclicals, consumer services, and consumer defensive. So a very interesting mix of what has been getting hit this month amidst the market sell-off. Another interesting perspective on market movements here, looking at the VIX more specifically. Now this is based off of the 30-day option pricing for the S&P 500, so this is just domestic large cap focused here. But you can see the VIX saw pretty sharp rally higher last week, ending the week above 31. Now, what does that mean? Obviously, high volatility as we've been seeing in the market, but more specifically, when you break this down as a expected monthly move, you take the VIX, divide it by the square root of time here, so that would be 12 months within a year. That brings us to an expected monthly move of about 8.66% over the coming month. Now, this is just one model, one method to look at the market and potential price moves in the S&P 500, but it does go to show that with the VIX at this high of a level, significant volatility is expected over the coming month, and it would not be unusual if we saw another swing of either 8 to 9% higher or 8 to 9% lower, largely dependent on how geopolitical events unfold. Moving along in our market news, Meta and Alphabet faced legal setbacks last week, with juries ruling against them in cases related to child safety and social media addiction. While both companies have the resources to absorb the financial penalties, these rulings could set important precedents and signal a growing wave of similar lawsuits against giant tech companies. Combined with broader market weakness, shares of Meta were down more than 11% last week, shares of Alphabet down almost 9% last week. Now, it was a pretty light week for economic data, but we did want to take a look at the state of initial claims, as we do have a jobs report on the books for this week. Looking at initial claims last week for the week ending March 21st, initial claims came in at 210,000 for the week, up slightly from the prior week and pretty close to the 4-week moving average. Overall, you can see they've been in a pretty healthy range, below 260 for the past year. Actually been trending slightly lower in recent months here, consistent with a low hiring, low firing environment. Last but not least, several important economic releases are on deck this week, including February's retail sales data and March's ISM Services Index, which will offer an early read on consumer and business demand as we enter the second quarter. The March payroll report coming out later this week will also be pretty significant, with expectations calling for about 48,000 jobs added in March, which would be a large improvement from last month's 92,000 jobs lost. So that concludes this week's market update. We really appreciate you tuning in, and we look forward to seeing you again very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors, and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.